All right, everyone. Today we're going to break down Mercado Libre's absolutely incredible fourth quarter results. Now, the numbers, they reveal a company making a massive calculated bet. They're sacrificing today's profits for what they hope is going to be total market domination tomorrow. We're going to dive deep into the data to really understand this high-stakes growth gambit and, what it really means for their future.
But first, before we get into the thick of it, our standard disclaimer. This explainer is for educational purposes only. It is not financial advice.
Okay, so here's our game plan. We'll kick things off with the record-breaking Q4 numbers. Then we'll unpack the central theme here, that strategic battle between growth and profit. We'll look at how they're pouring fuel on their commerce and fintech engines. We'll put a special spotlight on their explosive cross-border trade. And then finally, we'll connect all the dots to reveal their big, long-term bet for 2026.
So let's just get right to the headline numbers for Q4. And, to put it simply, they're staggering. Mercado Libre really finished the year with a quarter for the history books, showing a business that is just firing on all cylinders.
The key number to wrap your head around is this: nearly $8.8 billion in revenue in a single quarter. Now, this isn't just a big number. It really shows the incredible scale they've achieved and just how effectively they are dominating the market all across Latin America.
But what's maybe even more impressive is the speed of that expansion. We're talking 45% year-over-year growth. For a company of this size, that is just phenomenal. And look, this wasn't some one-off quarter either. They actually accelerated their growth throughout the entire year. But this explosive growth is really only half the story.
And that brings us to the absolute heart of the matter, the central thesis of this entire story. Because Q4 wasn't just about growth, it was about a very, very deliberate trade-off between capturing as much market share as possible today versus maximizing profits right now. And here you see that trade-off in black and white. On one side, you've got incredible growth. Merchandise and payment volumes are absolutely soaring. But on the other side, you see the cost. Operating margins are getting squeezed, and net income actually fell. This contrast right here is the absolute core of their strategy.
You can see the result perfectly right here. The operating margin dropped from 13.5% all the way down to 10.1%. Now, this isn't a sign of weakness. Let me be clear, this is a strategic choice. This is our central thesis. Mercado Libre is purposefully sacrificing today's profits to fund massive investments aimed at locking down this market for years and years to come.
So the natural question is, where is all that money going? Well, let's start with their core commerce business. They aren't just spending to grow, they are methodically building an economic fortress that competitors are going to find nearly impossible to breach.
They are pouring capital into these key areas, making free shipping an everyday expectation in a huge market like Brazil, scaling their massive logistics network so they can handle more packages at a lower cost, and even selling products themselves to control the user experience. You see, it's all designed to make their platform absolutely indispensable for their 121 million buyers.
And is it working? Well, the data is crystal clear. Just look at the growth in goods sold on the platform. Up 35% in Brazil and Mexico, and a staggering 42% in Argentina. This isn't just growth, folks. This is a land grab. They are turning investment dollars directly into market share.
Now, this aggressive investment story is just as potent on the fintech side of the business. With Mercado Pago, their ambition isn't just to be a payment processor. No, it's to build Latin America's largest digital financial institution, right from the ground up.
And their strategy here is brilliantly simple and totally disruptive. While traditional banks, they see customer deposits as a source of cheap funding and profit, Mercado Pago sees them as a customer acquisition tool. By offering really attractive yields on funds held in their digital wallet, they're giving millions of underbanked citizens a compelling reason to join their ecosystem.
And the proof is right here in the numbers. Just 3 years ago, they held $2 billion in user deposits. Today, it's nearly $19 billion. This explosive growth shows their strategy is working perfectly. They're pulling in users and their cash, creating this massive new audience for high-margin products like loans and insurance down the road.
If you want to see this entire investment strategy distilled down into one perfect example, you have to look at their cross-border trade business. This is where you can draw a perfectly straight line from spending money to achieving absolutely explosive growth.
The number is almost hard to believe. In the fourth quarter alone, the merchandise volume from their cross-border sales grew 74% on an FX-neutral basis. Let that sink in. This initiative, which was a smaller part of their business, has suddenly hit a massive inflection point, all thanks to focused investment.
So what's driving this? Well, this acceleration is being overwhelmingly fueled by a strategic focus on one key trade route, the China to Latin America corridor. They identified a massive opportunity to connect the vast manufacturing and seller base in China directly with the consumption-hungry market of 121 million buyers in Latin America.
And this is not just some concept on a whiteboard. It's backed by tangible, physical investment. In December, Mercado Libre opened their first ever fulfillment center in China. This is the engine behind that 74% growth. It lets them take control of the supply chain and create a seamless bridge for Asian sellers to get onto their platform.
Okay, so how does this all tie together into a long-term vision? All these pieces, the shipping, the fintech, the cross-border, they're all part of a single, unified strategy for 2026 and beyond, building an unassailable competitive moat.
This chart here tells the whole story. It breaks down exactly where those profits went. And you can see the margin decline didn't come from inefficiency. No, it came directly from two things: the cost of those shipping subsidies and higher marketing spend to bring in new customers. This is the price of growth, laid bare.
In fact, the company actually quantifies this for us. They state that these key strategic investments had a combined negative impact of 5 to 6 percentage points on the operating margin this quarter. What that means is, without these aggressive growth bets, their margin would have actually expanded. They are choosing to reinvest everything, and then some.
And a quote from their shareholder letter says it all. "We do not solve for short-term margin optimization." I mean, they couldn't be any clearer. The entire company is laser-focused on trading today's profits for what they believe will be a much larger, more dominant business tomorrow.
So, this all comes down to one central question for us. We've seen the strategy, we've seen the investment, and we've seen the incredible growth. But is Mercado Libre paying the right price for market domination? Are today's profits a worthwhile sacrifice for what could be total control of Latin American e-commerce and fintech tomorrow? The evidence this quarter certainly suggests they're all in on a very powerful and, so far, very successful bet.
It's a high-stakes gambit for sure, but it's one that could redefine the future of commerce in an entire continent. If you found this breakdown helpful, like and subscribe for more videos.